It's an interesting moment for Amazon. How do you think that this holiday is going to go? That is the second Prime Day. Is it going to be successful considering that they've already had one not all that long ago, just a few months ago?
Well, I think that they're going to have a successful Prime Day today and tomorrow. I was already on looking at electronics, and I think that that's going to be a smart strategic move as well. You know, you're actually seeing a bunch of the physical world retailers get out their holiday promotions even earlier, and I think Amazon's trying to get out in front of that. And why is that? Well, if you're the average family and you have a median household income of around $70,000, 10% inflation in the last year, that's $7,000 less that you have to spend. Even if you got some kind of a wage bump, let's call it $5,000 less, and you're just going to have to prioritize more. And in contrast, you've had all this uncertainty in supply chain, so you're likely to have glut of inventory in a lot of these different companies. And I think we're going to see all kinds and forms of creative discounting as we go into the holiday season.
Right. And Matt, when we saw, I think it was last week, FedEx give its warning for the holiday season, you certainly saw Amazon shares slump in sympathy. But when you look at their hiring plans for the holiday season ahead, it's flat with last year, 150,000 workers. Do you think that Amazon is better positioned than, say, a FedEx or a UPS going into this holiday season?
I think that Amazon is better positioned. I think there's two things going on there. One is the concerns around economic demand and consumer spending, and that's going to hurt both of them at some level this year. And again, why Amazon's trying to get out in front of this with their Prime Day. But the other thing is that Amazon they have built more than a FedEx in the last 10 years from scratch. And so they have basically their own supply chain logistics system now. And so FedEx is losing market share as well as facing the headwind of the consumer spending. And so I think that Amazon is ramping up to hire, and they're going to have a very impressive combination of, you were talking about gig economy workers, they've got these, small businesses that are independent contractors that do last mile delivery for them. It's a different model than the pure gig economy, but it's a ecosystem that they've built over the last decade, which is really impressive and I think is going to hurt FedEx.
Yeah, Matt, let's talk more about inventory. Part of my concern heading into the holiday season, so, you've got these sales that are at the beginning of Q4, this Prime Day, and, Walmart, Target are doing their thing too. Suppose a lot of that gets liquidated. How important is it how many inventory turns we have throughout Q4, what the profitability is, how much the retailers have to discount in order to move it, and therefore what the profits are and how much they have to hire throughout the season? Because if people are working during the season, then they can spend. Right. So how important is that whole dynamic?
Well, I think that the jobs are going to be there. Again, we're continuing to see, impressive numbers on low unemployment. I think the issue really is inflation. And back to that, median household income of 70,000, if inflation's up 10% across the board in the last 12 months, you've effectively got $7,000 less to spend, and you're going to have to prioritize. You're not going to be able to buy as much. So what I think is going to happen this holiday season is that top lines are going to be okay because unit volumes are going to relatively hold up, but the deep discounting that's going to come in a lot of creative forms towards the back end of the quarter is going to be what hurts bottom line. I think you heard that earlier, David on from Goldman, and they're worried about bottom line. They're worried about operating results, and I think that's right. Top line's going to be okay, but bottom line is going to be under a lot of pressure.
Yeah, and Matt, how does that fit in with the way that Andy Jassy is running the company? There's a good article as well this morning out from CNBC talking about sort of his approach to profitability versus his predecessor, Jeff Bezos. What do you think investors should expect, not just in this quarter, but in terms of that financial discipline that we're going to see from this still relatively new CEO?
Well, I think Andy takes a very long-term view. But yet you've also seen him take steps this past year in his first full year of closing certain initiatives, whether that's the Amazon Health initiative or whether that's certain store initiatives that they've had. And so he is going to keep a high bar for long-term ROI. He's not going to close something down because it's not looking good in the short term. But I think that's what you'll see out of Andy. But he and his team will keep making investments. There's so much to invest in. Think about that logistics build out over the last 10 years or the warehouse build out, which they got a little bit ahead of themselves. Mm-hmm. Now they're going to be more disciplined on that. Another whole area that not just Amazon, but all companies are really trying to wrestle with is, what do I need in terms of physical space in the world of hybrid work? And how can I reduce costs while maintaining creativity and productivity and impact from my workforce, in the case of Amazon, that doesn't just work in those warehouses, in those logistics situations, but works in the home office, in places like AWS.
Yeah, and interestingly, Amazon has taken a somewhat softer approach maybe than their other big tech peers with that return to office and making it mandatory. Matt Micklewayne, thank you very much for being with us today. Madrona Partners.
Thanks, Deidre.